Welcome back to Bazaar Morning Call. So the gift nifty is absolutely flat right now. What's happening is, on one hand, the market is very strong. We have good global cues. Crude has fallen. US bond yields have cooled off. And, of course, in our own markets as well, that trend has been on the upside. But on the other hand, TCS's numbers have been less than impressive. So Rima's here to give us the latest on that. And, of course, we'll hear from the management in a while from now. Rima, hi, good morning.
Hi, good morning. So it's a mixed bag from TCS this time. 3 positives, 3 negatives. On the positive side is the margin performance. Margins expanding by 110 basis points sequentially ahead of street expectation. Very strong deal wins at $11.2 billion, the second highest on record, led by JLR and BSNL. And the third one is the cool-off in their attrition numbers, almost back to pre-COVID levels at 14.9%. But on the other hand, the top line has disappointed the street. It's declined on a quarter-on-quarter basis in dollar revenues, down 0.22%. This is the first decline that we've seen in over 3 years in the last 13 quarters. Second, headcount has fallen by 6,300 employees sequentially. Headcount is also seen as a lead indicator for future demand. And third one is buyback. It's a good size, 17,000 crore rupees, but I think the street would have hoped for at least a number similar to last year at 18,000 crore rupees. So given it's a mixed bag, I would still veer towards the stock perhaps underperforming from here on, because in the run-up to the buyback, the stock had outperformed. Secondly, brokerages have brought down their growth estimates for the full year, given the Q2 miss. So Citi, for instance, is saying that for this year, TCS is likely to clock in a 3.5% top-line revenue growth. HSBC has a hold call on the stock, given the valuations are reasonable. They don't see too much upside. But you also have a lot of bulls in TCS, so Bernstein says that the strong deal win sets up the company very well for FY25. So Bernstein is going to go with an outperform rating. Back to you.
All right, Rima, thanks a lot for that. And you stay with us, because in a short while from now, we'll have the management who will be joining in to detail their Q2 performance. Well, let's focus on the next stock, Grasim. Well, that stock ended at the high point of the day yesterday. The street was sniffing something, it seems, because the stock did spike up, particularly in the second half of trade. Now, they've announced post-market hours that the board meeting will be on 16th of October, and they're going to be considering a fundraising. They're saying they could consider a rights issue, a QIP, or even a preferential issue. What could this be used for? Well, to fund the growth capex and also maybe deleverage their balance sheet. In the last couple of quarters, from the end of FY23 to the end of first quarter, well, the debt number went to around 3,500 crore rupees, so it nearly doubled. That's because of the ambitious capex plan. Remember, most of the capex that they have lined up is going to be for the paints division. And for the year, they've lined up close to 5,800 crores of capex, out of which they've spent close to 1,400 crores. So most likely it will be for capex as well as deleveraging balance sheet. What the street doesn't want, though, is that any of this money goes towards Vodafone Idea. The management has assured the street numerous times that that's not going to happen, so that's unlikely to happen. Expect the stock to open up in the green. But Mangalam, you're tracking a few numbers that came in overnight. Tell us more.
Well, there are business updates that have come in from Patanjali and Sula. That Patanjali is down and Sula is up. It's something that tells you a little about the consumer sentiment as well. For Patanjali Food, edible oil segment has been facing ongoing pressure coming in from excessive imports, as a result of which they would see an impact on both their revenues as well as their margins. The price trend in edible oil observed in Q1 remains same in Q2 as well. While they have seen an uptick in the edible sales volumes, single-digit growth, the overall revenue would be lower because of the sharp decline that we've seen in edible oil prices. Just like Adani Wilmar, what has done well for them are the foods and FMCG segments and their soya products as well. So that is a small part which is growing extremely fast. Sula Vineyards, net revenue up 11% in the second quarter. Own brands have done a better growth, 14% higher. In that as well, elite and premium wines, which are margin accretive, have done a growth of 18%. And own brands is 90% of their revenue, elite and premium, 74% of their revenue as well. And importantly, we've been talking about how, wine tourism has increased. That vertical of their company has grown 26%. So the uptick on Sula continues.
Okay, people drinking more wine, but not focusing so much on their health, is it?
Well, not having oily food, but instead having a lot of wine. Let's put it that way.
Okay, well, I don't know how much of a good thing that is, but let's go on to Ekta. She's waiting by to tell us about some pharma stocks that she's looking at this morning. Ekta, hi, good morning.
Thanks for that. Well, I'll start with the hospital stock Aster DM. Sources have indicated to Bloomberg that PE firms such as BPEA EQT as well as Ontario Teachers Pension Plan are companies which are considering a deal to acquire Aster DM assets, including the India business. Blackstone and KKR are set to have bid for the India business. Valuations of around $1.5 billion is what is doing the rounds. Prospective acquirers could also team up to basically buy out the entire business of Aster DM. Valuations of around $2.5 billion for the entire business. Dubai-based Fajr Capital is looking to buy majority stake in the Gulf business for the company. Valuation of around $1.1 billion. So overall, there are prospective bidders separately for the India business, Gulf business, as well as a possible deal for the entire business. So this is a story that we will be tracking. CNBC-TV18 has not verified this report independently. Aurobindo is in focus because it's a big deal. They've signed a letter of intent with an American multinational pharmaceutical company, which is Merck Sharp and Dohme. This is basically for contract manufacturing operations. It's definitely a big positive for Aurobindo, but right now it's an LOI, which is a letter of intent. So let's see how it progresses. Cipla, I expect the stock to be in the green because the US FDA has issued an establishment inspection report with a voluntary action indicated status, giving it a green signal to its Invagen plant in the US. Remember, it was inspected earlier in September and was issued 5 observations. So now it's in the green, or rather it's been cleared by the US FDA. So we can expect that stock to be in the green.
All right, Ekta, thanks for that. But the